I want to welcome Andy Schectman. He is the CEO, president, owner of Miles Franklin Precious Metals. Welcome, Andy.
Good to see you. Thanks for the invite. Happy to be here.
Excellent. So yeah, just want to get an understanding from you. You probably know more about this than anyone at this point. What is the demand for physical precious metals?
Well, for the past 15 plus months, going on more like 16 or 17, the demand has been really 180 degrees different from anything anyone in this industry has ever seen. One of the things that has been really illuminating is the rise of the Wall Street Reddit group. Jimmy and Ivan and Lee, those folks have created a buzz that I never would have thought would have been possible. In fact, there was a time not too long ago where, in the recesses of my mind, I was concerned that the interest in gold was dying along with the increase in interest in cryptocurrencies. That, we were talking about an archaic relic of the past. Now, I never believed that. In my heart, in my soul, I believe that precious metals are wealth and have been since the beginning of time and will be long after I'm gone. I think there's a place in every portfolio for precious metals. But what has happened over the past several months is an awakening, a renaissance, if you will, into the understanding of precious metals. And a lot of that has to do, obviously, I think anyway, with cryptocurrencies, in that cryptocurrencies are somewhat of a synthetic short on the dollar. Cryptocurrencies in and of themselves are somewhat cut from the same cloth as precious metals, at least in terms of ideology. And when you talk about freedom from an establishment and from a government that is destroying, or governments that are destroying, eviscerating the value of the purchasing power of their currencies through the printing press, cryptocurrencies have awoken a whole generation of people. And a lot of these people are very, very bright. These young people who I never thought had any interest in precious metals, first and foremost, understood the reason to buy cryptocurrencies and what it meant in terms of its relation to the dollar. And they have become, in my opinion, far more embracing and accepting of understanding precious metals. Now, really, when I say precious metals, what I'm really getting to is silver. And that's where they have zeroed in on Wall Street silver and the value that you find in silver. Over the last 2 years, last year and a half, probably 90% of all of our sales have been in silver. Last year, we had our biggest year ever, almost 600 million in sales. By far our biggest year ever as a company. 90+% was all in silver. Same thing holds true here this year. So the demand for silver is really quite extraordinary. The awakening by a whole new generation of people is extraordinary. It's not just here in North America. We're seeing this globally. I get emails from all around the world. So I think that in general, the demand for precious metals is off the charts, unlike anything we've ever seen ever collectively as an industry. It ebbs and flows, and there are some days or weeks that are far greater demand than others. There's a lot of people waking up to the manipulation of the gold and silver market too, and the whipsawing and the volatility and what that means. But in general, as a blanket statement, the demand is unlike anything I've ever seen. And it has not died down really since more or less March of 2020. It's been extraordinary the entire time.
Yeah, why do you think that is? Why in March of 2020 did people just flock in droves to precious metals?
Well, I think, they say there's no bull market like a gold and silver bull market, because in every other bull market, you're talking about greed. And they say in general, people are motivated by greed and fear. And that's a generalistic position. But if we take that at face value, greed being making money in the equity market or in the cryptocurrency market, you want to make money by investing in something that allows you return on your capital, whereas precious metals is more about return of. And I think people got really scared about what the pandemic was going to bring, what it meant, the lockdowns. People had never seen that before. Supply chains being shut down, people being locked down, governments enacting policies that I think scared the hell out of people. And precious metals obviously are a hedge against uncertainty. And when you saw a government that also had chosen to more or less use the printing press as one of its main tools, I think it only added fuel to the fire. People said, my God, look at what they're doing. Look at how they're, in a matter of months, creating trillions of dollars. It took this country hundreds of years, almost 300, to create 800 billion in wealth. And since the repo market problems of 2019 to where we are today, you're talking $9 or $10 trillion created by the Fed. A trillion seconds ago was 31,688 years ago. I think people realized rather quickly. Not only that, in March, you had the Dow fall by 40% like that and freak people out even more. So I think what you had is it's people realizing that, return on your money is nice, but return of it is more important in times of uncertainty and concern and fear. And as we've moved forward, the reactions by the governments and what they've done to eviscerate the value of their currencies, I think has only reinforced people's mentality and strengthened their grip on what they already own.
Absolutely. So they just flock to precious metals, and there's now a frenzy in demand for physical precious metals. Not so much the miners, not so much even like the paper ETFs, right? The paper price, but the physical is just through the roof, right? Like you can buy it on Amazon, and people are buying on Amazon for $50 an ounce, right? So do you see this demand dying down at all? I mean, or do you see the money printing just in this vicious cycle that's going to drive people even further into physical?
Yeah, I don't see how they can stop. I mean, if they stop with the subsidies and the stimulus, it just deflates the whole balloon and everything collapses. I don't think that they can. I mean, there wasn't one Fed governor in the latest FOMC meeting that voted to taper or to raise interest rates or to stop their asset purchases. Just the talk of the possibly next in 2023, maybe we'll talk about it. Just that kind of hyperbole, sent the markets in a frenzy, and interest rates falling and bond prices rising. And all I can tell you is I don't see how they can stop it. I really don't see how they can stop it. They've entered a period of time where it's inflate or die, because we are in a period of time where if interest rates rise, we're in some serious trouble. You have, for the first time in my career, you have stocks, bonds, and real estate all positively correlated. They used to be inversely correlated. Stocks and bonds did. It used to be risk on, risk off. So they need to keep interest rates low by buying the back end of the bond market and keep throwing money at markets that are, they're overextended. And if they stop, the whole thing collapses. So I don't see how they will do it. The biggest problem ultimately being, where does that lead us? Both roads lead to the same place. In other words, if you realize we're already in real negative interest rates, where you have the 10-year Treasury paying about 160 basis points, but inflation, as transitory as they call it, whatever that means, the last CPI numbers came out at 5%. So that if you take those numbers at face value, that means you're guaranteed to lose 340 basis points or 3.4% year over year compounding, guaranteed for 10 years. It might be the only time the government is actually honest with you and telling you they guarantee that you will get back less than you put into it. So you have two options here. The Fed can either continue to buy treasuries to hold down interest rates to create the wealth effect, but that inflation, that increased inflation, that monetary phenomena creates a hyperinflationary environment where ultimately interest rates rise, which collapses everything. Or they back away from the bond market and they let Mother Nature take hold right now, and interest rates spike right away. In other words, ultimately, both roads lead to the same place. And I think that the difference is that through inflation, they are able to keep the game going a whole lot longer than just outright backing away or defaulting and letting Mother Nature take care of things. So I don't see how this stops. I don't see how people look until real interest rates are above the rate of inflation. The price of gold and silver have a long way to run, because people say, well, it doesn't pay a coupon. There's no interest on precious metals. It's just a dead piece of metal, right? Well, it sure beats the hell out of negative interest rates. And so I think until interest rates are firmly above the rate of inflation, the bull market has a long way to go. And ask a guy like John Williams, Shadow Stats, he'll tell you we're at 12% inflation right now, not 5%, and that we are on the heels of hyperinflation. So I think, I think the Fed knows this. They're not very forthright about it, and they realize they're caught in a sticky wicket. And I think they'll always choose the printing press over austerity. And I think that means there's a long way to go in this bull market. Honestly, I really do.
Great. Yeah. And it seems really fascinating just that physical has completely outperformed the paper price, right? And so could you speak a little bit to the dynamic between why paper silver just been flat at 30 or below, and physical just has had actually a great return on investment over time, right? So why is that?
Well, that's the manipulation of the market. I mean, you can go back to February 1st and 2nd, right when the Wall Street Reddit silver squeeze deal was happening. The few days before that happened, you had silver on the heels of $30 an ounce and massive demand. In fact, I think it was the most silver ever put into SLV over a two-day period since the inception of SLV. Huge demand. All of the dealers were working 24 hours a day. I mean, I literally was working all day and all night. I remember the Friday night that this happened. And maybe it's like January 30th or 31st, right before February 1st and 2nd. It was a Friday night. And typically on Fridays, my head trader will ask me, how long should we go into the weekend? Do you have any shows or any interviews you're doing? And what he means by that is that the market sleeps on Friday night at around 6 o'clock Eastern to Sunday at around 6 o'clock Eastern. That period of time, that 2-day window, 48 hours, is the only time the market sleeps. Other than that, it travels the globe more or less 24/7. And what we will do at the end of business on Friday is buy long contracts into the weekend so that we are able to sell and be hedged. That particular weekend, he bought 55,000 ounces, 11 COMEX contracts. We were long 55,000 ounces because he knew that there was some buzz. And so we figured that should be safe over a 2-day period to sell 55. That's a lot of silver. Silver was $30 an ounce nearly. You can do the math. That's a lot. Later on that evening, late into the evening, I was doing live stream podcasts on Arcadia Economics. And there was a buzz coming around that all the online companies were sold out of product. And in looking at their website, that's what it looked like. In reality, it was a little bit different. They all shut down that night, Friday night, shut down like they were out of product. I'm like, crap, this has never happened before. Early Saturday morning, I get a phone call from my head trader, bright and early, like before most people wake up. And he sounds panicked. He says, do you realize that you sold 90,000 ounces of silver last night? You're 35,000 ounces naked exposed to the open on Sunday night. And that's why all the other companies shut down, because the demand was so enormous in this environment, so off the charts, that all the online companies sold out of product and sold out of their hedge over the weekend. And now they're looking at, everyone's talking about the price of silver gapping up maybe $10 on Sunday open. Everyone's freaked out. If that would have happened, it would have cost me $350,000. So I said, shut it down. For the first time in 31 years, we closed down our business on a Saturday morning after all the online companies did it the night before. And when the market opened Sunday, it gapped up about $1.50 right away. It cost us $42,000, but we had then hedged everything. The demand that day continuing was off the charts. Sunday night, as London is closing early in the morning, as it transitions to New York City, which would be the open Monday morning, in the access market, in this little window after London closes and New York opens, someone dumped 1.5 billion ounces of silver, paper silver, on the COMEX, or on the market, in the thinnest of trading, when everyone's closed in London and not open in New York. That's 2 years worth of global mine supply, basically, dumped like that. Dropped the price by $3. Now, in the real world, someone who did that would be fired and prosecuted, maybe not in that order. But the point of it is that this was done to control the price and to control sentiment. And in an environment where SLV is getting record inflow, where silver is now at $30, where all the online companies sell so much they shut down in the middle of the weekend, why would anyone want to dump all of that silver instead of bleeding it out over days or weeks to maximize the return, to maximize the value of the transaction instead of guaranteeing the worst possible execution? The price fell by $4. We saw the same thing here the other day, last week, right before the FOMC meeting, where 1 billion ounces was dropped, like last Thursday, and then another 500 million on Friday. These are all paper transactions that, right at options expiration, number one. So, the big commercial banks who sell the options, they expire worthless, they collect the premium, and they play this game and they keep pickpocketing from the big funds. The thing is this: the only way you can successfully manipulate a market over an extended period of time is to push it in the direction that it is going. And with the new Basel III reserve requirements coming into play here in the United States today, in Europe today, and in the rest of the UK and the United States, January 1st, one could only hope that this will inhibit the banks from pushing the price around like they used to. But I will tell you this, and Steve St. Angelo has a great chart, SRS Rocco, that he put out just the other day, maybe a couple of weeks ago, showing silver over the last, silver over the last 20 or so years, where nearly 80% of the demand came from industrial and a very small 20% from monetary. That has flip-flopped since 2020. And now all of a sudden you see this massive demand globally, monetarily. But what people haven't really caught on to yet is, in this new green digital world, the new and expanding and evolving applications for silver are extraordinary. When we were offline, you told me that you had just done an interview with Keith Neumeyer. Keith is one of my favorite guys in this industry. I've known him a long time. He's one of the few mining execs who is not a geologist. He's a businessman, and he understands the way things work in a business capacity. For that reason, I own a few of his plays, First Majestic being one of the cornerstones of my portfolio. But he was on a show with me not too long ago where he told me publicly that what's coming out of the ground is 8-1. Now, I think he's revised that now to 7-1, meaning 7 ounces of silver is globally pulled out of the ground for every 1 ounce of gold. And yet it's priced at roughly 68 or 70-1. It's 9 to 10 times underpriced. So it's a depleted asset, as it's found in the earth in a form called epithermal, very close to the surface. It's coming out of the ground at 7-1, but priced at nearly 10 times that. Its expanded uses in digital and green technology are growing by the day. And its monetary uses have exploded because of this new awakening. And so the fundamentals behind silver are extraordinary. When you see commercial banks that are shorting a year and a half worth of global mine supply in an effort to control the price. It reeks of desperation. It reeks of repositioning. Because if you look at the COMEX deliveries over the past year and a half, they are extraordinary. What we saw come off of COMEX last year, about 330 million ounces, that's a decade's worth of deliveries in my entire career. And now all of a sudden, you have this group that is titled the Others on the Commitment of Traders report, which is thought to be sovereign wealth funds and family offices, the wealthiest, most connected private investors in the world. They're draining COMEX of its supply. Now, I don't know what the numbers look like here for the July delivery, the end of the June contract is any day now. Last I checked, there was over 220 million ounces that were open interest that could actually stand for delivery against 111 million ounces of registered silver in the COMEX, twice the amount. We're getting really close to that seminal moment where, pardon my English, but the shit's going to hit the fan. If more people stand for delivery, then there is silver to be delivered. This is somewhat of the same environment that the Hunt brothers noticed in 1980, where there were more contracts issued than there is silver in the warehouse. You put it all together, the expanding uses for silver, the huge deliveries off of COMEX, which is completely unusual. And it's been going on for over a year now. The inequity between what's coming out of the ground and what it's priced at, the monetary explosion, all of these things tell me that silver is the buying opportunity of a generation. And then there's one last piece. And that one last piece to me is the Chinese Belt Road and Rail Initiative. And not enough people are talking about it. To me, I believe it to be the biggest event of all of our lives. You have the Chinese who are embarking upon the largest infrastructure project in human history. It is connecting 70% of 70% of human population, 45% of global GDP right now before they industrialize Africa and parts of Asia that aren't. And you're talking about a country that, or the Chinese who are settling the majority of these contracts on the new Chinese digital yuan. So on one hand, you are indoctrinating 70% of human population into a new digital currency. And on the other hand, they're not just connecting all of this with roads and bridges and maritime channels, it's done digitally as well. And to connect 70% of human population digitally uses a copious amount of silver. So when you put it all together and then add that onto it, and oh, by the way, 3/4 of the human population won't be using dollars the way they used to. Maybe they're using the Chinese digital yuan, and maybe the Chinese decide to back their new yuan by gold at some point, seeing as that they are the largest accumulators, the largest producers. As far as I'm concerned, that's the biggest event of my career, this new Chinese digital yuan and the implementation of it in the new Belt Road Initiative. I think it ultimately will challenge the dollar for world supremacy at some point for singular world reserve currency. But when you talk about silver and look at all these crazy uses, ending with the Belt Road Initiative and the big money, the private money, the biggest money in the world, draining COMEX, holding down the price and taking delivery, just like JP Morgan did with 1 billion ounces of silver, according to Ted Butler, 10 times what the Hunt brothers tried to buy. The big money has been front running this trade for the last 4 years. And so price to me is irrelevant. The longer they hold it down just means the more we can accumulate at subsidized prices, because the actions of these sophisticated traders, to me, speak to a different outcome than the price would dictate.
Yeah, so it seems pretty obvious that the big money is taking physical delivery and they're probably preparing for just like this revaluation, right? And they're going to do really well on that. Yeah.
Well, that's right. They front run it and they prepare. You know, there was a time when I was a licensed financial advisor, and I had been in this industry for a few years because our business started with Swiss investments. And so I understood contrarian investing. I was a real young man at the time. I was probably 24. And I went to get my Series 7. And the Series 7, it's a hard test that allows you to trade stocks. But you go to a class basically for a week, and they give you a book about this big. And you go through 5 chapters a day in class, and then you take self-tests at home. And after a week, you've gone through the whole book, and you take your Series 7. I'll never forget this. And I find it interesting when we talk about what you just said, or in that light. Page one, you open up the book, literally page one, there's one paragraph. And this is a book that's mainstream as it gets, going to new young people trying to become stockbrokers. It says the little man rule. It basically says the little man never wins because the little man always makes his or her move after the big man has positioned themselves. And that's exactly what we see happening here. And if I look back at the last 4 years worth of movement, starting with the German Bundesbank repatriating their gold and everything that's happened since then, including gold being reclassified as the world's only other tier one reserve next to US dollars, it tells me ultimately where we are heading. We are heading into a period of time where there's going to be big de-dollarization and big change. But when you see what the central banks of the world have done, starting with the Bank of Germany, the Dutch National Bank, the Austrian Bank, the Bank of Poland, the Bank of Hungary, the Bank of Austria, they all repatriated their gold from the Bank of England and the New York Fed. Then they reclassified gold as a tier one reserve long after they had brought it all back. Then they started buying gold hand over fist, the central banks, over the last several years. They're still doing it, buying it hand over fist. I just read something today. All the big central banks are gobbling up gold. And so they reclassified it, they repatriated it, they're accumulating it. Now you see it coming off of the gold and silver, coming off of the COMEX. And all of these things are telling me that this is a wheel in motion, a ball in motion where big money is repositioning. They are de-dollarizing, and the little man will wake up one morning and be like, holy crap, how did that happen? And that's what the little man rule speaks to, that the big man has information and they act upon it. The little man sees it, may think about it, but doesn't do it until it's validated by the mainstream. And by then it's too late.
And the sentiment right now from like the retail kind of trader investors, you know, in Robinhood, they are not happy, right? They think, oh, it's never going to go up. And I love seeing negative sentiment in an asset that's down for a long time, right? Because, you know, that's when you want to buy. You want to buy low.
Of course. Absolutely. Listen to a legendary investor like Rick Rule, a friend of mine, and he'll tell you that the biggest money he's ever made in his life has been when no one wanted it, when it was a discarded asset. And when everyone is talking about it, it's time to sell it. He will tell you that straight up. I guarantee you. I've had conversations with him about that. And the worst possible time to buy it is when everyone wants it. And the best possible time to buy it is when nobody wants it, if you're looking for a value. I think he has a statement that says, either you're a contrarian or you're a victim, one or the other. And I think that's the way that you win. When you're a contrarian, you buy value and you're not a victim. If you buy something that has been touted by the herd and the big money has positioned themselves ahead of the herd, you're a victim. But then they sell. That's how big money gets bigger, and how people who follow the herd get hurt.
Exactly. Yeah. And so physical silver is a protection against the manipulation, though, right? Because you can resell it yourself at a premium if you acquire it, right?
Physical silver to me is wealth. And I think people need to understand that it's not an investment, it's wealth. Gold and silver are wealth that have been valued that way for 5,000 years. And the way that I look at my metal is that I hope I never need to sell an ounce of it. If I do, I'm damn glad I have it. And that's not just for an emergency. It could be an opportunity. Maybe it's blue chip stocks trading at single digit price to earnings ratios, paying a 6 or 7% dividend like they used to way back when. Or maybe it's that cabin up in the North Woods that is selling for, you know, a fraction of what it used to once things correct. I mean, with interest rates where they are right now and as easy as money is, everything is price discovery is so difficult and everything is so inflated, especially in things like real estate. Maybe when we see things revalue or correct, or we see the excesses correct that have been manipulated to higher excesses, to higher valuations, based upon the low interest rates and easy money that the Fed has given us, maybe there are opportunities that you don't see down the road there where you sell some gold and silver and take advantage of those opportunities. But until then, I hope to give it to my children. Hope I never need to use it. And there are very few things that you can pass on to your family that have not only a tremendous amount of intrinsic value, but sentimental value as well. If dad left this for you, you're going to think twice about pissing it away, to go take a trip to Vegas or something. It'll be the last thing that you sell if it has not only intrinsic but also sentimental value. And I think that's one of the reasons that I like precious metals and think that they're not an investment. It's wealth, and wealth that you hope you never need to use.
Yep. So silver seems to be in a perfect storm right now, right? So you have the industrial use, you have the investment use, you have all the behind the scenes big money movement. It's like a no-brainer, right? But then let's move over to gold, which the narrative of the day is, Bitcoin is the store of value against inflation. It's not so much gold. What do you think about that argument? Can Bitcoin eat into the store of value of gold, and which doesn't have as much of an industrial use?
I want to take you back on that, what I was just talking about a minute ago, and you tell me when we get to the end of it. So in 2017, the German Bundesbank says to the New York Fed, give me back my gold. We want it back by 2020. Within a month or two of that happening, and at this point, all the central bankers were net sellers of gold. Within a month of that happening, the Dutch National Bank, the Austrian Bank, the Polish Bank, the Bank of Hungary, they all started repatriating their gold from the Fed and the Bank of England. The following year, 2018, the banks as a group bought more gold. Those same banks bought more gold as a group than they did in the 60 years previously combined. 2019, those numbers were up almost 100%. April of 2019, the Basel III reclassification of gold levies gold to the only other tier one reserve in the world next to US dollars. It's a riskless asset, meaning if you have on your balance sheet, you have a liability against cash as an asset, it's a zero risk. If the cash carries zero market risk. Well, they said gold now has that same zero risk. So they've levied gold to the only other tier one reserve on par with cash in the world. So keep that in mind. So first, the banks uncharacteristically say, give us back our gold. Then they buy more as a group than they did in the 60 years combined. Then they reclassify it. That same year, they add almost 100 times more than they did the year before, or 100% more than they did in the year before. And then in 2020, we start seeing these new players, the third reportable group on the Commitment of Traders report, the others. And they start taking massive amounts of gold and silver, as much in a month as we would see in a year, every single delivery month. Not just silver, but gold also. So, and this has continued to where we are here today, where they're taking huge deliveries. So, put it all together. And let's not forget that you had the Bank of or the International Monetary Fund come out and say, we want a new Bretton Woods. Well, Bretton Woods and the International Monetary Fund are tied together. They were at Bretton Woods after World War II. The International Monetary Fund and the World Bank were formulated at the Bretton Woods meeting, which now anointed the dollar world reserve. Well, now you have 190 countries that comprise Bretton Woods, or that comprise the International Monetary Fund, and so we want a new system. We want a new dollar system. So first you have all the banks accumulate, then it's reclassified. They're pulling it off of the sophisticated private investors, the sovereign wealth funds. I mean, who's to say they're not central bankers wearing a different shirt, or friends of central bankers, people who are in the know, that are now draining the COMEX and the London Metals Exchange of metal. Huge, huge deliveries month over month. I guess what I'm getting at is that I see the most well-funded, well-informed, sophisticated investors in the world look at gold in a very different light. To levitate it to a tier one status is the ultimate form of money. There's no risk. I think there is a place for cryptocurrencies and for Bitcoin, but they certainly lack the 5,000-year history that gold does. And I think that in the end, the biggest money in the world is showing us their hand as to where gold fits into the new ecosystem. The fact that they're copiously accumulating it, the fact that they've reclassified it, the fact that they're all repatriating it away from the Bank of England and the Fed tells me what's happening. Then you see a country like China, who month over month imports more gold than anyone in the world. Last month, it was 50 tons, 40 to mainland China and 10 to Hong Kong. So you're seeing the largest importer, the largest producer. They don't sell, they don't export an ounce. The rest of the world looks at gold very differently. And I think that there is a place for cryptocurrency, but by no means do I find it to be an alternative. I think they're distant cousins. They both speak to the same, in many cases, to the same problem or to the same issues. But to me, gold is eternal wealth, immutable wealth. And Bitcoin might be in the end. But until then, no, I think it's a complement to one another instead of a either or situation.
Yeah, I could see crypto as a speculation. Like you can do well on it if you trade it the right way. But as far as it's just so funny, if you're against government control, you want to put all your wealth on this like blockchain accounting tracking system and just put it up on the cloud where every government agency can track it. I mean, it's just really funny that
under the new Biden tax proposal, anyone who sells more than 10,000 in Bitcoin, like we take Bitcoin for precious metals, and the reason we do is because it's hedgeable on the commodity exchange, the COMEX. There's a contract. If you sell more than 10,000, we have to fill out a Form 8300. That means they're looking at it as cash. So if you spend 10 grand anywhere, if you took 10,000 in cash to Macy's to go buy a wardrobe for your whole family for the next 2 years, and you paid in over 10 grand in $100 bills, they'd give you a Form 8300. If you went to PGA Superstore and bought 12 sets of golf clubs and paid cash for it, over 10 grand, they'd give you a Form 8300. You buy gold from any gold company in over 10 grand in cash, you're getting a Form 8300. Any retail transaction in the United States that you pay with over 10 grand in $100 bills or $20 bills, green cash, you get a Form 8300. If you write a check or an ACH or a wire for 25 million, there's no anything. 10 grand in cash, they want to know, how do you have 10 grand in cash type of deal, and so they're now doing the same thing with Bitcoin. And so I think it's certainly awoken. You got the Fed going after Binance, or the Justice Department and the IRS are going to audit Binance and Kraken. They're looking for people who are looking at cryptocurrencies maybe the wrong way, in that a lot of people think they have all this anonymity and that they can go in and out of different cryptos without recording it and paying the gain. I think they're going to have a big awakening this year. I think that the new tax issues are going to look squarely at those people, and you have to ask yourself, what's your end game nowadays? And I'm the wrong guy to talk about cryptos, but nowadays it seems like the only way to get out is to switch to Bitcoin, and then you get out into cash or something else. Maybe I'm wrong with that, but that's the way it appears to me. And now they've kind of closed the door on that Bitcoin exit without having to pay ultimately or file a Form 8300, which is going to say, where did this cash come from?
Exactly. So it's completely and utterly traced and tracked. And it's just really funny. It's just, how can you be a revolutionary and try to fight the government when like you're on an accounting system where they're just going to track everything? And then it's really funny if you think about, because the digital central bank currency is going to come out. Is that just going to be trading on Coinbase, and you can choose between that or Bitcoin or Ethereum, and it's just one of?
No, I don't think so. In fact, I think it will be the antithesis of that. It'll be a Fed app you'll just download on your phone, and then they can enact full modern monetary theory and whatever they want to do right to your phone. It's not going to be tradable. It's not going to be a tradable token like on Coinbase, I don't think. I mean, actually, in theory, I suppose it has to be on there if you're going to pay in the new Fed token to buy something else, if they even allow those other things to be traded after that, at that point. But I do believe we are most certainly going to see a digital Fed token. I've been saying that since last March, when Nancy Pelosi came out and said that COVID can live on currency. So she wanted it during her sub-house finance committee bill. She wanted to have a digital Fed token then, a year ago. So at that point, I knew the genie had been let out of the bottle. It's coming for sure.
Exactly. So that's great. We talked about how physical precious metals has really outperformed paper, how there's a perfect storm in the silver market for demand. It's being suppressed, it's undervalued, and how gold is a store of value and the risks of blockchain. So you run Miles Franklin. buying precious metals can be kind of a weird thing. Do you want to trust the mail with it? So first, can you give people just an idea of how to buy precious metals, and then we can talk about where people can go to learn more from you.
Yeah, so we've resisted the online platform. We've had it. We closed it down. We're building a new website now that will have limited online capacity. We live in a world where identity theft and hacking is real. I can tell you stories that would blow your mind. Meetings I've had with the FBI over it. It's, I guess you could say we're old school. For the last 15 months, our prices have been as good or better than anyone in the country. We've been around for 31 years. We've never had a customer complaint, ever. You can try to find one, you won't. You give one of our brokers a call or email info at Miles Franklin for an updated inventory list. We send out every week and update it if need be. I think you'll see that not only is doing business with us very easy, although it does require a phone call, but that our prices will be as good as anyone. And in Minnesota, where our corporate office is located, even though I recently moved to Florida, we're the only state in America where you have to be licensed and bonded in a federally non-regulated industry. And always the real cheap companies online are the ones that seem to get in trouble. Lear Financial just got indicted by the New York District Attorney for defrauding seniors. And in the past 5-6 years, you've seen Tulving and Bullion Direct and Northwest Territorial Mint. These are huge companies, always one of the least, if not the least expensive online, go out of business. And with it, people's money stolen to the tune of about $200 million. Well, the state of Minnesota put an end to that for the citizens of Minnesota or anyone who's buying gold from a company listed in Minnesota like us. In other words, it's a federally non-regulated industry. There's no government oversight. Minnesota being the only state, we're licensed and bonded with a very large surety bond and annual background checks of everyone in the company, all principals included, myself included, and continuing education and compliance that no one else in the country has to be subservient to. Most of the online companies, almost 100% of them, have boycotted Minnesota because of that. Because the bonding alone is very invasive. The owners have to be personally responsible for all of their assets. You have to give a full disclosure of your assets, and if anything happens, they can attach them. So, it makes doing business with us safer than anyone else in the industry. On top of the fact that we're one of only 27 U.S. Mint authorized resellers, never had a customer complaint, A+ rating, we're licensed and bonded. Give us a call, send an email, and we would certainly be able to, I think you'll see, match or beat any price out there. And if people want to send a email to info at Miles Franklin and reference the early stage investor, I will personally make sure that they get the best prices in the industry, and that personal attention from one of our brokers who I've personally taught myself.
So where can people go just to learn more from you and keep track of your updates?
So our website is milesfranklin.com. We have the gentleman who was running our social media, his name is Elijah Johnson. And Elijah is now working with his father, Dunnigan, who is the purveyor of Liberty and Finance. They work closely with Miles Franklin. So our YouTube and social media aspect has been on hiatus for the last 3 weeks. We have hired new marketing staff that is now re-engineering everything. So go to milesfranklin.com, sign up for our newsletter, or send an email to Andy at Miles Franklin or info at Miles Franklin, and we will get you all of our updates. I do several YouTube updates per week. And, our website, which again is being retooled, we're building a new one, which is maybe a month away from being finished. You can still get all of our previous blogs, previous video updates, and all sorts of information on milesfranklin.com in the meantime. But, like I said, we're old school. They can give us a call anytime. All the numbers are on the website. Give us a call and we'll chat with you. We'll answer all your questions in real time and make sure that it's done the right way the first time.
Excellent. Thank you so much for stopping by. Really helpful.
Yeah, it's been my pleasure. I hope to do it again with you real soon.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.